American Hotel REIT, OTC, AHOTF, TSX, HOT.U, TSX, HOT.UN, owns a portfolio of branded hotels in the United States. The REIT's revenue and net operating income (NOI) should get a lift in 2019 thanks to its property improvement plans. However, we are concerned about its revenue and net operating income growth this year as PIPs will cause temporary interruptions to many of its hotels. In addition, its profitability will continue to be impacted by rising operating expense. Its shares are currently trading at a significant discount to its U.S. peers. Investors may want to take advantage of the near-term weakness to grab more shares. Source: company website. American Hotel REIT's property improvement plan. American Hotel is currently undergoing major renovations in many of its hotels. This is because under the terms of the applicable franchise agreement, American Hotel is required to complete various property improvement plans (PIP) within 18 to 24 months of the acquisition date. The goal is to renovate the hotel property to meet the franchisor's standards, and to ensure the hotels remain competitive in their respective markets. While American Hotel's PIPs has resulted in earnings disappointment in the past few quarters, it has the potential to generate higher revenue per available room (RevPAR) in the future. Below is the table that shows American Hotel's scheduled PIP projects in 2018. As the chart below shows, 3 of its hotels will have its renovation completed in Q2 2018. There will be 3 more hotels undergoing renovation in Q3, and 5 more hotels in Q4. This means that its earnings may continue to be lumpy in the next few quarters. However, once these projects are completed, these hotels will be much better positioned to attract guests. In addition, these hotels will be able to raise its room rate. We expect its revenue and earnings to be positively impacted by these PIPs in 2019. Source: Q1 2018 MD. Impact of seasonality. Investors should keep in mind that the impact of seasonality on American Hotel's revenue and net operating income (NOI) has increased considerably after its Eastern Seaboard's acquisition. Readers may recall that American Hotel acquired 18 hotels, 2,187 guest rooms, located in Maryland, New Jersey, Pennsylvania, Connecticut, and New York back in June 2017. The following table shows American Hotel's percentage of total 2017 NOI by different quarters. As can be seen, nearly 1/3 of its total NOI is earned in its third quarter, whereas less than 20% of its total NOI is earned in Q1. While it is normal for hotel industry to experience seasonality, investors should keep in mind that American Hotel's net operating income is increasingly dependent on one quarter. This means 1 or 2 unfavorable events, such as last year's hurricanes, in its high season can have a higher impact on its revenue. Source: Q1 2018 MD. Economy is already at full capacity. Operating expense, especially wages, expected to continue to rise. The timing coincides with American Hotel's PIPs as capital expenditure may be higher than management anticipated. Rising wage may also hurt American Hotel's operating margin. This is evident in its latest earnings report, where hotel expense represents about 68.7% of the total revenue in Q1 2018. Hotel expense only represented about 66.3% of the total revenue a year ago. As a result of rising operating expense, its NOI margin declined to 31.3% in Q1 2018, down by 240 basis points from a year ago. Deteriorating balance sheet. While I like the fact that an American hotel has little debt maturities until 2022, see chart below, I am concerned about its balance sheet. As can be seen from the table below, its debt-to-gross book value increased to 53.6% in Q1 2018 from 48.4% in Q1 2017. Similar, its debt-to-EBITDA ratio increased to 8.1x from 8.0x a year ago. In 2016, the ratio was only 7.2. Similarly, its Q1 2018 income can only cover 2.3x times of the interest expense, whereas its income in Q1 2017 can cover 3.0x times of the interest expense. American Hotel's interest coverage ratio should gradually improve as its PIPs approach the finish line. Source: Q1 2018 MD. Its U.S. Hotel REIT peers are trading at a price-to-AFFO ratio of 12.1x. This implies that the company is trading at a significant discount. TD Securities estimated that American Hotel REIT's net asset value (NAV) is about $8.50 per share. Compared to its current price of $6.38 per share, it is trading at a 24.9% discount. It is important to note that its U.S. peers' average price-to-NAV ratios are about 100%. I believe part of the reason why American Hotel is trading at a discount to its NAV is because it is listed at Toronto Stock Exchange. For most Canadian investors, it takes more effort to understand the hotel industry in the United States. In addition, Canadian investors are subject to 15% withholding tax because its businesses are located in the United States. Investor takeaway: American Hotel's PIP should help the company to gradually improve its revenue and operating margin in 2019. However, we are concerned about its revenue and net operating income growth in 2018 as PIPs will cause further displacement and interrupt many of its hotels' operation. In addition, its profitability will continue to be impacted by rising operating expenses. There is probably little downside as the market has likely factored in these near-term concerns. Its shares are currently trading at a significant discount to its U.S. peers. Investors may want to take advantage of its current share price and grab more shares. Note: this is not financial advice and that all financial investments carry risks. Investors are expected to seek financial advice from professionals before making any investment. Thank you for reading. If you like my article, please scroll to the top of the article and click on Follow to receive future updates. Disclosure: we have no positions in any stocks mentioned, and no plans to initiate any positions within the next 72 hours. I wrote this article myself, and it expresses my own opinions. I am not receiving compensation for it, other than from seeking alpha. I have no business relationship with any company whose stock is mentioned in this article. Editor's note: this article discusses one or more securities that do not trade on a major U.S. exchange. Please be aware of the risks associated with these stocks.